And you'll see that they lived in a zone for quite a few, decade and a half or so, both those base metals. And in 2006, very late that year, silver and gold were already in a bull trend at that point. These metals took off and tripled in value, base metals. And since then, they've come back down, but they've never come back down into that prior zone of reality. They live in a new zone of reality that is double or more on average for the last 10, 15 years of what it used to be back in the 1990s to 2000. Well, silver's still in that first range, okay, where it was from the 1979-80 high, the 2011 high. Gold's above the 2011 high, copper's above the 2011 high, and silver's still contained here? Give me a break, okay.
Gold has breached the $4,000 per ounce mark, and silver momentarily rose above $51 before a sudden decline elicited a panicked response from the media. However, Michael Oliver, a market analyst, contends that the purported collapse is a fabrication, a fabricated maneuver that is intended to deceive investors just prior to the actual escape. While gold, copper, and other metals have already entered new price realities, silver has been trapped in a restricted range between $20 and $50 for decades. However, Oliver contends that this suppression is no longer viable. He describes a quantum surge in silver as the convergence of the fundamentals, the technicals, and the monetary system, a reevaluation that has the potential to redefine the true value of this metal. He is of the opinion that the subsequent significant development will not involve a gradual ascent. It will be very catastrophic, the type of movement in which silver does not plummet by $1 overnight, but rather opens at a higher price of $3 to $5, rendering short sellers unable to cover. The final shakeout before silver escapes decades of manipulation and surprises the global market is the classic setup.
And it got to 51 and dropped back under 50 slightly, so it made new highs. Futures did not. They stopped at 49.76, a couple cents below $50. So some guy said, I'm going to sell the nearby future just below 50 and risk a nickel. Okay, make a dime. Okay, well, they're getting a sell-off here. Fine. Okay, I think it's idiot selling. Our assessment technically is that silver is about to make a quantum leap to a new reality. It's not in a bull trend. It's in a total shift phase in its price zone that it's lived in for 50 years. 50 highs, basically 20 is sort of a low, and it just lived there forever. Go to the Federal Reserve of St. Louis, Fred, and you can punch up charts like lead or zinc and go back in price history. And they'll have a monthly close-only chart going back to the 1990s anyway. And you'll see that they lived in a zone for quite a few, decade and a half or so, both those base metals. And in 2006, very late that year, silver and gold were already in a bull trend at that point. These metals took off and tripled in value, base metals. And since then, they've come back down, but they've never come back down into that prior zone of reality. They live in a new zone of reality that is double or more on average for the last 10, 15 years of what it used to be back in the 1990s to 2000. Well, silver's still in that first range, okay, where it was from the 1979-80 high, the 2011 high. Gold's above the 2011 high, copper's above the 2011 high, and silver's still contained here? Give me a break, okay. We know the fundamentals. I don't try to keep up with them too intimately because that's not what we do. But the technicals argue to us that we're about to blast out of this range and not just have another nice leg up, but move into a price zone of new reality. I'm betting it's well over 100. It may be between 100 and 200. And I think a lot of that's going to occur in a handful of months, 5 to 6 months. We're waiting on one trigger. That's a spread relationship between gold and silver. And we run momentum studies of it as well. Now, everybody looks at the ratio, the 80-70 to 1 type thing. We do it a different way. We divide silver to gold, express it as a percent. And right now, silver is about 1.2%. of the price of an ounce of gold. That's extremely low going back 50 years. It's been over 2%. In 21 of the past 50 years, silver has reached 2% of the price of gold. And some of those weren't even bull market years. Okay, so we're very submerged, but there is a very clear structure on the spread charts. When you plot the spread chart, silver versus gold, there is a pending triple top breakout at 1.31%. So we're not far below there. When we cross that level, the same thing happened to its spread versus gold in 1979 and in the fall of 2010, just before silver went totally vertical. It went from like 20 something bucks to 50. Boom. All in a handful of months. The spread was the tell. And we're watching that. We think it's going to break through. And our momentum of the spread suggested even a lower level than that 1.31%, which is a prior double top. We'll break out before that. And when we do, when that spread breaks out, I'm putting the seatbelt on. I think silver is the place to be for the next 2 quarters. And the move could be enormous. And you look back and say, oh, now I understand why. Supply demand's been tight, et cetera, et cetera. Market has been at an irrational level for too long compared to other metals, for example, that have done the same thing, had a tantrum and moved to a new reality. Anyway, that's my major comment.
Michael Oliver is recognized as one of the most disciplined technical analysts in the precious metals sector. Additionally, he is not making an educated estimate. His conviction is derived from momentum spread analysis, a technique that monitors the performance of silver in relation to gold. The gold-to-silver ratio, which ranges from 70 to 1, 80 to 1, and so forth, is the most frequently examined by analysts. Oliver spins it. He quantifies silver as a proportion of the price of gold. Currently, that figure is a mere 1.2%, one of the most suppressed readings in the past 50 years. Historically, that figure has been closer to 2% on average. Additionally, it has risen above 3% during bull markets, even reaching 6% in 1980. His research demonstrates that silver experiences a historical explosion when the silver-to-gold differential exceeds 1.31%. It transpired in 1979. In 2010, it transpired once more. Within months, silver experienced a significant increase from $20 to $50 on both occasions. Not years. At present, we are situated just below that trigger. Oliver's words, "When this breaks, put your Seattle on." He is of the opinion that this breakout will occur within the next 2 quarters, as central banks discreetly stockpile both metals to protect against fiat instability, and gold continues its historic surge above $4,000. The coiled spring is silver, which is still underperforming, while the gold market has already entered a new zone. Oliver anticipates that it will rebound rapidly upon its release, with the potential to double or triple within months. Additionally, the fundamentals are in agreement. Silver is no longer solely a monetary metal. The modern economy is supported by an industrial backbone. The demand for solar energy on a global scale has reached unprecedented levels. The production of batteries and chips is increasing, and governments worldwide are investing billions in green infrastructure that necessitates substantial quantities of silver. Nevertheless, the supply of mines remains stagnant. Concurrently, the arrangement is being exacerbated by monetary factors. The global M2 money supply has increased by over 150% since 2011. After accounting for inflation, the value of $50 in silver from the 1980s would exceed $250 in the present day. Nevertheless, silver remains below $50. That is not typical. Oliver asserts that this is a distortion that is awaiting correction. He observes that the long-term price range of every other significant metal, including copper, zinc, and gold, has already been breached. Despite having the most strategic demand profile and the tightest supply chain, only silver remains confined. Oliver contends that silver will not simply increase when that distortion ceases. It will overcorrect, entering a new long-term zone which is expected to be between $100 and $200 per ounce. He refers to this as the awakening phase, the moment at which years of suppression, short selling, and deceptive price signals are overcome by genuine market forces. If this occurs, silver may not only surpass gold, but it may also outperform it significantly.
It's all silver production, which means the black line, which is the mining, and the red line is mining plus recycling. And what you see from 2024 onward is that basically we're in a deficit situation based on industrial demand alone, and that we've been in a deficit for the last 4 years or thereabouts. Now, that's what Jim Dines used to call a natural corner. We've all heard about, ad nauseum, the hunts try to corner the market and all that. Well, what Dines said is there'll be a time where the market forces for industrial use only will corner the market. In other words, we won't be able to mine and recycle enough to meet the demand. Well, that's what this chart shows. Now, where I disagree with Matt honorably is the silver or gray bar on there shows investment demand. That investment demand is roughly 200 million ounces consistently from 2025 to 2050 for the next 25 years. Well, no one knows the future, but I contend that as we move into this paradigm, which is one of my main themes from day one when I learned about honest money, is that you can't print your way out of this mess, which means more and more people are going to be seeking real truth, which means real money. So those gray bars, you could double and triple them. And not to be too nitpicky, but the line at 2020 shows 200 million. That is incorrect. It should be up here, if you can see my cursor, at about 1.25. Because in that year alone, the demand for silver in quote unquote physical terms was 320 million by the ETPs and the normal 200 million by retail, for like 520 million ounces in that 1 year on investment demand. So if we can do that in 2020, we can do it in 2025. So I think this situation is, Michael and Craig have said, and many of us, that we're getting into a new paradigm. I don't like to use that lightly, and I think Michael said it best. I mean, we're in a situation where reality is going to shine through on all the naysayers like they can't believe it. I mean, we get through 60, 70, people are going to be doing the one-handed salute going, oh, I hated Morgan, or he's an idiot, and oh my God, look what's happening now. I don't have too many detractors on X right now. I'll put it there. I'll give it back to you. I'll quit sharing the screen. And that's the low case, by the way. If things go higher for AI or EVs or what have you, it'd be beyond that. So I'll just leave it there. Thank you for letting me share.
And yet price hasn't responded in a real way. I mean, you think about dollar terms also. 1980, $50. In real dollar terms, where would it put us now? It's probably 250, okay? In the decay in the value of the U.S. dollar, not relative to other currencies, but in real buying power. Even over since 2011, money supplies increased like 150%. Okay, has silver increased that much above the 2011 high? No. Okay, so there's all kinds of realities out there that we know exist. We scratch our heads and say, this is ridiculous. Okay, we do anyway. And we know when it changes, it could change in a way that is, well, we've seen it in many markets. We've been around long enough to see when a market gets overvalued for too long, it gets ridiculous. In hindsight, everybody calls it a bubble. Of course, when it was happening, nobody called it a bubble. Or a market gets suppressed for so long that people think, oh, that's a new reality. It's a piece of crap. We don't, who cares about silver anymore? And it suddenly says, I'm going to wake up. Markets make mistakes. Investors make mistakes in terms of allocation, proper pricing in relation to reality. These things happen. Markets aren't always rational. And I'm arguing that silver was irrational, especially for the last 10, 20 years, of not ever coming up above this base range high that virtually every metal in the world has done. And not silver? Oh, okay. What for? And now it's moving with gold now because it's a monetary metal, but when silver engages on the fundamentals, like the graph we just saw, it'll have its own life. And I think it's going to move to a new reality. And again, if you do a dollar conversion, $200 is not irrational whatsoever. And sometimes when markets are too irrational one way, when they correct the other way, they overcorrect. Okay, you go way beyond what the new reality might be in silver. Maybe silver's going to live in $100 to $200 range for the next 10, 20 years. But it might reach 200 and fall back to 150. You'd get my point. And there's a new reality. The technicals are arguing for that, especially the long-term momentum technicals and the spread relationship to gold. Argues that silver, just to go back to its normal reality, let's say 2% of the price of an ounce of gold, which it's been 21 of the last 50 years. You've seen it at that level. In bull markets, silver spread to gold goes above 3%. In 1980, it went to 6.5%, the price of gold. But let's say it just goes to 2%. Well, what's 2% of $4,000 gold? Okay. What if gold goes, and we've been arguing this, and does what it did twice before? It had bull markets in the last 50 years, both of which were 8-fold gains, bear low to bull high, under circumstances that are far less dramatic and earth-shaking than what we have building out there now. If gold did it again a third time, had another 8-fold move, we'd be 8,500. Well, what's 2% of that? Okay, you get my point. Silver's going to move into a new reality. This selling at 50, I love it. It tells me the idiots are still there. They stick a nickel in front of a freight train, and they got, quote, overbought situation on a short-term basis, but they don't see the larger context. And it wouldn't shock me that when we finally go through 50, we have a situation where we close one, I'm talking futures now, December futures. They're 47 something right now. They were up to just below 50 today. When they go through 50, it wouldn't shock me, and I'm not predicting, I'm just saying this would be justice. You close one day out at 49, next morning you open $3 higher, limit up or something, because force majeure, something going on, one of the fundamentals kick into gear, and suddenly you don't give these guys a chance to stop out of their short position. They put on at 50. You nail them to the wall and see if they can get out. Anyway, it wouldn't shock me that that's the way it happens. So I love seeing the selling at 50 because it tells me the idiots are still there.
Michael Oliver's warning is straightforward and unambiguous. Do not be deceived by the false narrative of a $50 collapse or the noise. This is not a peak. It represents the pivotal moment, the conclusion of the manipulation phase, and the commencement of silver's monetary reawakening. You will not have the opportunity to respond when it occurs. You will awaken to a new market in which silver is abruptly repriced and the previous regulations are rendered obsolete. The question is, will you be prepared or will you continue to wait for confirmation after it is too late? This is your signal to pay attention, as silver does not rise quietly when it eventually moves, provided that you believe in real value and comprehend the current state of global debt, dollarization, and fiat decay. It erupts explosively and without prior notification. The comprehensive technical analysis of the forthcoming silver breach is available in the full Michael Oliver interview, which is linked below. If you found this video to be beneficial, please remember to like, share, and subscribe for additional in-depth analyses of gold, silver, and the emerging financial order. I have a question for you. What do you anticipate will be the new reality of silver? Is the price of an ounce $100, $150, or $200? Please inform me in the remarks section, as the discourse regarding silver's future has officially commenced. The reset is not imminent,